general question is, what is insurance for?
Well, insurance basically is to protect you. It's from protecting you from being financially devastated if something happens. Especially with a home, it's your biggest asset. So it's so important that you have to have it insured. If you have a mortgage, it's going to be required, but it is your biggest asset. And it can protect you from, as I say, being financially devastated if you were to have a loss. And a major loss, especially if your house burnt down, you want to be able to make sure that you can rebuild that.
Right, it's kind of hard to write a check for $400,000.
Exactly.
Or the median home price is like $500,000.
Yeah.
So it's important to have insurance, especially if you have a mortgage. They're going to require it, obviously. But what are the if people are shopping around and want to come to you and talk to some, we always recommend talking to a few agents. What are the top 3 to 5 questions that they should be asking when they're shopping for homeowner insurance?
Yeah. Typically, it's hard especially for a first-time home buyer, they don't really know what to be asking. So it's actually my role to advise them and explain what homeowners does for you, how it protects you, the type of coverage it provides, because you're not only insuring the structure, but the contents as well.
Okay.
And it can provide you with liability in case somebody was injured on your property, or if you had a dog and it happened to bite someone, that could end up in a lawsuit. So there's a lot of coverage on there, but no two policies are alike. So as I say, Allstate, our company, are going to have some other benefits and bells and whistles that will go along with that. So you're going to have your standard coverage, but you'll also have some optional coverages.
Okay.
And so it's my role to educate and also to explain that there is a difference as well between the value, the purchase price of that home, and the actual cost of insurance, the cost to rebuild it. So there are some differences. So I'd like to try to explain to my clients so they can just fully understand the process and what insurance means.
So all good points, and I think the number one thing is when you are shopping around, make sure you're comparing apples to apples. I know that every insurance company has different deductibles and all that, but when you come in and you want replacement costs, you want deductibles, make sure they all kind of match up when you're shopping, because otherwise, if your deductible is $500 and then you go to another company and it's $10,000, it's obviously going to be wildly different. So
yeah, you're going to have different costs depending on your different deductibles. A deductible is your out-of-pocket portion.
Yeah.
So let's say you had $1,000 deductible. That just means that any loss that you might have, say your wind blows, the fence is blown down, or there's a loss with your roof, that damage has to exceed $1,000 before you could actually file a claim. So again, if the lower your deductible is, the more you're going to pay for your insurance because you're taking on less risk. The higher your deductible, the less you pay because you again are taking on
your premium.
You're taking on more risk yourself.
Okay, so the top thing is if you're shopping around, make sure that you come in, you talk to 3 to 5 people, but you compare apples to apples. So if you set $1,000 for your deductible, make sure you ask that throughout and make sure you're comparing all. So
exactly.
We'll get into the specifics here, but one of the things that comes up and put you on the spot here is, what is a clue report?
So a clue report is where an insurance company goes out and looks at any previous losses. So insurance is all about risk. It's transference of risk. But they will run certain reports, and a clue report is a database where insurance companies can see if a client themselves have had any previous losses or any claims, and it will also show if a property that they are purchasing has some losses as well. But it's mostly looking to see if the client that I'm looking to insure, if they have prior claims.
Okay,
because that can impact your rate.
Okay, so if you have more claims like auto insurance, it's going to be harder to insure them, correct? I mean,
if it's on a home, basically, it will depend how many losses, what type of losses, and some companies may only allow 1 loss, some may allow 2 losses, say in 3 to 5 years. It can depend. So all companies vary, and the type of losses too, where those losses a fire loss, a theft loss, and maybe they don't allow a previous fire claim, or they don't allow more than 2 water claims. So it can all depend. So that's why they run a clue report.
When does that happen in the real estate transaction? Do you do that right when you get the policy
I
in?
do it right up front. As soon as somebody's requesting a quote from me, I'm going in the system and I'm putting their information, and it is one of the first things I bring up to them. I ask them permission if I can run an insurance history to see if they've had any prior losses. And then right at the beginning of the transaction, when I'm inputting all their information, I'm pulling that up, and that allows me to see right away if this client is even eligible for this policy. Because if they do have some claims and now they're not eligible to be with Allstate at this
You have to
time,
find someone else.
then they would have to go get insurance somewhere else. Or it might be that I'm awfully sorry, I can't insure you at this point, but I see this claim is going to drop off in 6 months, and maybe that's something we can revisit then.
So keep in mind when you do file reports or file insurance claims, there's a database like everything else, and they're
Yep.
watching you. So that's something else to keep in mind. If it's something small, you might want to take care of it yourself.
Yes.
But if it's something bigger, obviously, if it's a complete loss.
Yes.
But keep that in mind is that there's a database and they're watching you. So we talked about this, but we're going to kind of do the deep dive here. What is the difference between replacement costs versus cash value insurance policies?
Replacement cost, a homeowner's policy should always be replacement cost, really. I do not like to write actual cash value. So the difference is replacement means we are going to replace your home for you. So if something happens, we will pay up to the limits. You'll be able to rebuild your home, repair it, and it's total replacement.
Okay.
With cash value, it means they take the replacement cost of that home and then they depreciate it to take into account any
How old?
depreciation
Okay.
to it. So over age, they look at the age of it, and if it has, if the roof has deterioration, if the cabinets, the carpets, everything, they take into account all that deterioration, the depreciation, so you're not going to get as much of it. So say it's to replace it, it's 400,000. But then you might only get 270,000 based on a depreciated value.
So that's a good question to be asking is if it's
Is
cash
it-
or full
yes.
replacement, because
Is
especially
it a full replacement policy?
with all the inflation, it can be
Rising costs and everything.
So
Typically, all mortgage companies do require a replacement
Okay.
policy. So if you are, if you have a mortgage, a loan, then typically your homeowner's policy is going to be a full replacement policy. They require it, and they want to see documentation for that. But again, if you just own your home or your property outright, I would always check to make sure it's replacement, not cash value, because that really, that's not the best case scenario.
excellent. That's why we had you in right there. That was an excellent explanation. So that's a very important thing to check into. Next question we have is how can people lower the cost of homeowner insurance? So they have sometimes it's monthly or annual premium or 6 months. And a lot of questions we get as realtors is how do I lower my costs so I don't have to pay as much premium?
Yeah.
So how do they do that?
I would say that probably one of the main places I would go to if a client is concerned about the cost of their premium, I might be looking at the deductible first.
Okay.
Because it is all about their own, their own risk level, what they're comfortable with. You may have somebody that they have a nice little nest egg, they've got some savings, and they would be okay possibly going to a $5,000 deductible, because for them, they're like, I'm not going to put in a claim
Unless
for
it's a loss.
something that's small. Really, the way I look at homeowners insurance, it really is more for catastrophic loss. We don't cover, it's not a policy that covers wear and tear and maintenance. It's a sudden accidental loss, and it's really to prevent you, like I said, from being financially devastated. So you really don't want to put in just the little type of claim, little losses. It really is for those bigger types of, losses and claims. However, it depends on people's budget. So some people, on average, maybe we see more common is $1,000 to $2,000 deductible, but there may be that person that is really comfortable with $5,000 and especially $10,000.
You get lower
I don't see that as often, but there are those clients that do choose that. And again, that can keep their costs way down. When you take on more risk, as I always say, you're going to pay less for your insurance. So the deductible is probably the first place I would look at, because I'm really kind of uncomfortable removing and lowering, coverages, which could also keep the insured exposed
Okay.
for
Yeah,
future
you don't want to get rid of
losses.
all your insurance.
So we might be able to shave a few things off here and there, and there might be a coverage that really they think they don't need. So that's why I like to go through everything line by line, and I can always work with a client. So if I make recommendations, but due to their loan and trying to close, and there's certain amount that they need to fit in,
Yep.
we can always work with them to get their loan closed, so we're not holding anything up, and then we can revisit coverages after.
Excellent. So use the ability, if you have more cash in the bank, higher deductible. What about, in your experience, if they have multiple policies through their car, does that help?
Absolutely. So the more policies that you would have with us, the more you're going to get discounts. You're going to get multi-policy discounts. So if you had your auto with us, you're going to save at least 25% on your homeowner's policy just for having the car insurance. And then the other policies, you'll have some more discounts. The more policies, especially with Allstate, the more you have more savings on the homeowner's
And that's
insurance.
generally speaking, if you have multiple policies.
Multiple policies will generally reduce your rates.
So keep that in mind.
Rather than having
Don't
just
have
the
your
one.
policies throughout. It's probably easier to manage too.
Yeah.
And get them in and.
Have them under one roof, because that agent tends to know you and know all about you, and then you've got your policies in the one place, and you're not having to call various different phone numbers and different people to get answers for different things.
Excellent. So ways to save money. Next question. Big question out there, because there's a lot of people considering condos now. So
Yeah.
what is the primary difference between insuring a condo townhome versus a single family detached?
Yes. So the main difference is with a condo, we are only insuring the walls in, because the master policy, the homeowners association tends to have a master policy that covers the studs out. So they would take care of the exterior, and our insurance policy would take care of walls in. And
So what is
studs
walls in? So if I
Studs
remove,
in.
so is that electrical? What is
Yeah,
that?
so anything so if you looked at this wall even,
It's-
and you see all the sheetrock,
Yeah.
it's that. So when they frame a building, and then the studs on the inside, everything is covered by your insurance company, and then the exterior on the outside of the studs, that's basically the master policy. And it's really important to take a look at your CCNRs and that master policy, because they can have very high deductibles
That you have to pay. That you have to pay.
that you have to be out
get
of
it
pocket
rebuilt.
for.
Isn't there insurance?
We
You
have,
can-
we have within our condo policy, we do provide deductible coverage. So if they have a $5,000 or $10,000 deductible with the master policy, we can provide coverage for that, so they won't have a gap in their insurance.
Excellent. Yeah, a lot of people don't know that. They go buy a
Yes.
house,
They don't know.
then they have a claim,
Yeah,
not theirs. It's the homeowners, and then they say, well, until you fork up 5,000-10,000. I've seen as high as 10,000.
oh,
And
a new one that I just found out the other
here we
day.
go.
A condo association
We
in
won't tell
town.
you who, but
I won't say who, just upped their deductible for water losses to $50,000. $50,000.
so,
Just so
but
they'll
you can
let
get insurance through Jane to cover that, and you pay a little premium, but it's probably not much. But so generally speaking, you're protecting the inside
Yes.
of the condo, but also keep in mind that why they have insurance on the outside, there's a deductible, and you need to find that out.
Exactly, but that kind of tends to be the bottom line of what the difference is between condominium and a single family residence. Single family residence, we're insuring everything, the entire structure,
Yeah.
everything. Condo is just studs in, but again, we are for both types of properties, we are covering contents as well,
Okay.
and liability.
All right, so we all know here, that was a good discussion. Be careful of condos. A lot of people like condos. They're a little more cheaper, but don't get
Yeah.
bitten when you don't
Yes.
understand the policy. And read through, and it's the resale package you get. So that's very important to go through your agent. So next question is, what items are generally not covered by the homeowner policy?
The
Just like the
obvious
couple of them.
ones right now, flood insurance and earthquake insurance.
Beautiful.
Oh,
Look at Turkey,
yeah.
the huge
Oh.
8.0 earthquake. Not that they're
Yeah.
at the building standards we have, but
Yeah,
we can have those. We can have easily a 7. Speaking from my engineering,
yeah.
we're in a high risk area for
We
earthquake.
are. We
And-
are. We're kind of up there with California and
Oh,
Alaska.
Right there. We
we
just
are.
haven't had one. We
Yeah.
had one in the 1950s in Wells that leveled the whole town.
Mm.
So something to consider. So it's flood. So that's a separate policy, correct?
Flood is separate. Yes. Flood. The way flood is covered is even though you've got coverage for a burst water pipe on your property. Flood is different because that's outside water. So basically, if water is gushing, there's flash flooding, and it's coming from the outside in, that is not covered. That's where you need flood insurance.
Great. And
Yep.
earthquake.
An earthquake.
Earthquake, unfortunately, is expensive,
Yeah.
and the deductible can be 10 to 20%. Correct.
Yes, you're exactly right. The minimum deductible for earthquake is 10%. So if you have a home, if you have
500,000.
coverage up to 500,000, you're basically having to have $50,000 out of pocket before they would even step in and cover you. You have to have at least $50,000 worth of damage.
Right.
Before they're even going to pay
And-
anything out. So you have to kind of weigh the cost
Yeah,
benefit
and
of
it kind of
too.
depends on if you're buying a brick house. So it kind of depends on when your house is built. Obviously,
Yes,
there's new codes every year that
yes.
the
The
internet,
water heater
code-
has to be secured as well.
Yes.
That's one of the major requirements.
and that's for appraisal. So that's a good point. But
Mm-hmm.
I see people take out earthquake insurance as they get closer to having their home paid off.
Yes.
I mean,
Yeah.
if you
Yeah,
only have
protecting
10%
your
down,
asset.
it's kind of being tactical, and because it's expensive. So,
Yeah. It
anything
is.
else? That's not. Those are the 2 top ones, correct?
Yeah, those are the 2 top ones, but really there's a homeowner's policy doesn't cover every scenario. So earth movement, and it's really just, as I say, it's sudden and accidental loss. It's not maintenance, it's not wear and tear. If you have issues of, you wanting things to be fixed, like your water heater, your AC going out, you might want to think about a home warranty plan.
And we're going to interview someone about that.
Yeah.
and-
But that's just something that you want to look at that. But for sure, earthquake and flood is definitely excluded.
And it doesn't hurt to run the numbers. So have your
Yeah.
agent run
Yeah.
the numbers and see if it's in your budget. Because it
Yeah.
may not be, and it may not be as important when you're first starting out and you don't have a ton of equity. But you want to, I'm not in the certain stage. I'm just kind of saying what I think is.
Yeah.
And generally speaking, as you get closer to paying your house off, you might want to, because you have
You
an
have
asset.
to
that's-
you have to revisit that and,
Yeah.
and look exactly. And the thing about flood insurance is, anywhere it rains is a potential flood, right? It's it's
Yeah.
going to have a potential flood damage. It just depends the risk level as to if your home is in an area that's
Well.
more risky than another area. And FEMA, I would implore people just to go out to the FEMA website, and you can kind of see where you live and what zone you're in. There are designated flood zones that are more high risk than others. And if you are looking to purchase a house, you might want to check that, because there are mortgage companies require flood insurance
Well,
on
it's not
top
zone
of your own homeowner's insurance, which can then make your mortgage payment a lot more expensive. So these are things to consider when you are looking at areas.
And that's
to
why
buy
you need a
house.
good realtor,
You need a
because
good
it's
realtor
Washoe
who
County.
knows all that kind
Washoe
of
County
stuff.
has, if you type in the Washoe County Assessor, off to the right is the FEMA flood map, and it shows you. But keep in mind, we get a lot of people from experience when I was an engineer. Some people said, it doesn't rain in Nevada. Well, the problem is, when it does rain,
Yeah.
it's a 1,000-year event. So you can
Yes.
get a tremendous amount of water within an hour or two that could cause flooding.
Yes.
So be careful, especially if you're next to the mountains.
And flood insurance is not something you can just purchase and get it overnight, or you
Yeah,
call it
30
that
day-
day. It's
30
a
days.
30-day standard wait, especially if it's not not required by the mortgage. So if you're not in a designated flood zone, you could be
Don't wait.
waiting.
Don't wait until it starts raining.
Prepare ahead of time for that.
And we do have more and more floods here, so just keep that in mind.
Well, apparently we've had more rain up to now than we normally have in the entire year.
Yeah, so it's been a wet year, so.
Yeah.
Anything else for the beginner person that's first time home buyer? Anything else out there that you can think of on the top of your head? Just, and you know, it comes down to make sure that you're talking to several people, but don't find someone that is knowledgeable and they'll take the time and that you feel comfortable with. That's why we like Jane. She does a thorough job. You know, and just because someone else has a policy that might be a little less does not necessarily mean it's better coverage. So.
Yeah, and I would shop around. It doesn't mean that you get one price and then that's just how it is, because they can all vary with their coverages,
Yeah.
and they can all vary with the prices. So you want to go with somebody that's educating you, that's giving you information. They're not just selling you a policy. Oh, you need this, and
you need to know. You need to look into it.
You need to understand the type of coverages. Have them explain, paint those pictures. That's what I feel like I try to do, is help people understand what they have. I don't just go and kind of check off a box and I'm selling you a policy. It's all about customizing a policy to your needs and helping you understand and be educated on what you have and how you're properly protected.
That's why we do these videos with Jane, because she's very knowledgeable. So what's your name and number? How do they get a hold of you? Email? What's the best way to get a hold of you?
Yeah, the best way to get a hold of me is you can email at janemortimore@allstate.com. Also, the office number here is 775-626-3400. And then my cell, which is 775-742-4194.
And, you know, if you guys have any other questions about insurance, we're going to do a next level video, so look out for that. But comment below, and then we'll also, in the link in bio, we'll put Jane's information so you can call her, look up her information, and get a hold of her if you need some insurance. So, Jane, thanks for coming in. It's always a pleasure to have you in and share your knowledge.
Well, I'm happy to.
And we'll be in touch with you guys out there. Until next time, you guys take care. Thanks.